the question into us, and we'll try and answer you on air. If not, we'll just at the end. The special newsletter which we produce for the end-of-year tax planning has been distributed to ESS BizTools subscribers. It contains end-of-year tips which relate to prepayments and a notation about personal income tax rates for 2011-12. We're going to have a look at the actual Business Plus newsletter for the end of financial year planning in a moment. The special paper is then dissected into a number of headings. The first one is the small business entity rules, which is covering items such as depreciation, entrepreneurs tax offset, which obviously is not available next year but still applicable for the June 2011 end. Then the newsletter covers the deductions that are applicable for small business entities, covering items like prepayments, interest, staff bonuses, holidays, etc. Then we have a special section which looks at deductions on an accruals basis. We have some comments on stock, assets, employment issues, reminding SMEs about issuing pay-as-you-go tax certificates, lodging declaration of wages paid for payroll tax purposes. And there's some notes on superannuation funds, some comment on income issues particularly related to bad debts recovered, income splitting, employee share schemes. Government grants. There's some comments under the heading companies which relate to franking accounts, treatment of company loans, advising that the interest rate for loans for 2010 and 11 is 7.4% minimum, comments on personal services income, capital gains tax, primarily reminding readers that they have to match capital gains or capital losses against a capital gain, and also referring to the tax officer's comments about wash sales. And there's then some comments on personal planning, looking at things like zone allowances, using the tax-free threshold, work-related expenses, superannuation contributions. And then we have some items particularly related to individual income tax returns, some of which would have already been covered under personal planning, but are bringing into account things like work-related motor vehicle expenses, etc. And attached to the document is a end-of-year tax planning checklist. So they're the items which we're going to go through in this special edition. So what you have on the screen now is the front page of Business Plus for end-of-year tax planning. You'll notice that the document requests the subscribing accounting firm to delete the text on the in red and insert your own firm name and logo, because when this Business Plus newsletter goes to clients, it's in effect from your firm, not from ESS BizTools. You can edit any of the material if you wish, but obviously you're then responsible for it. So what we have first of all is some end of year tips, commentary on the difference between cash and accruals basis of accounting, and then we've got the checklist itself. So first of all, we'll just go through and look on the left-hand column. They're initially relating to items within small business entity rules. So we're looking at the under $2 million income items to start with. Then we have deductions, prepayments, interest, etc. We'll just go back up to the top on the other column. Salary sacrifice, superannuation contributions, the non-concessional amounts, minimum monthly contributions of $450, interest on loan funds, repairs and maintenance, travel expenses, making a comment about keeping diaries, especially for overseas trips, motor vehicle expenses, commenting on the 4 methods that are available. Then in the second page of the document, we're continuing on these general deductions, building allowance if your client's eligible for it, research and development. Obviously, you have to register with Oz Industry by the 30th of April 2012 to claim the accelerated research and development deduction in respect of the year into 30th of June 2011. Comments on property owners' deductions, negative gearing, working from home expenses, legal costs. Now, a subscriber also receives a more detailed paper on each of these items so that you have some additional information if you wish to send to a client or perhaps answer some questions. Then we have deductions on the top right-hand corner on an accruals basis. Things like fringe benefit tax outstanding at the 30th of June, commissions, bad debts, write-offs, salary and wages accrued, and so on. Then we have some comments on stock. We have noted that small businesses don't necessarily have to value stock or undertake a stock take. But a comment's made there as to how stock can be valued if the business is conducting stock takes. We go now to the third page, which is looking at employment issues to start with. And the superannuation funds, commenting on the tax paid by the superannuation funds. Then we have the income issues, bad debts recovered, income splitting, employee share schemes. And back up on the right hand side we've got some more comments on the 2 types of qualifying employee share schemes. Comment about government grants. It's not unusual for people to receive a government grant and before they've been able to spend the money, it's the 30th of June and they're likely to get a tax bill. Obviously, if they're lodging on an accruals basis, it's arguable that income from a government grant, which is subject to expenditure acquittal requirements, is money held in trust until such time as it's fully expended. So I don't believe you'd have to bring it to account as income on an accruals basis, but obviously if you're lodging on a cash basis, the income has to be brought to account. Companies, commenting on the treatment of company loans and personal services income. Also on companies' non-commercial losses, then the capital gains tax issues. Then some personal planning matters to do with zone allowance, especially recording the number of days you spend in zone A or B if you live in another zone. Deduction for sickness and accident insurance, using the tax threshold. comment on end of year's tax schemes to make sure they've received the Australian Taxation Office's certificate, medical expenses, and then some particular comment about wage salary earners, work-related motor vehicle expenses, so that's basically the end-of-year tax planning paper. There's then a reminder for clients, and obviously this paper is targeted at people who are in business. It's a time of the year to have a discussion with your accountant about a whole range of issues to do with mentoring for growth strategies for the business, and they're listed there. And then what we're saying in the section headed Attention Accountants, you can get the actual checklist, and also the paper which we wrote on the federal budget. I've also got some issues which relate to end-of-year tax planning, or some more detailed comment on some of those items. What we suggest is that you delete the section headed Attention Accountants and put your own editorial comment in there. You might be running a seminar about end-of-year tax planning, but take that out so your clients don't see that. And obviously you brand it at the end with your firm's name. So that's the actual paper, the newsletter. What I've now brought up for you to look at is the end-of-year tax planning checklist. This covers the same items that were summarised in the Business Plus, but the information disclosed is in more detail so as to enable your client, if you wish to send this to them, to get more information about a particular issue. Or indeed you may have an inquiry from a client, and to find out what they're actually referring to, you can go straight to this document and give them the advice. So this paper is in more detail, as you can see. It's referring to the various items, especially the flood levy that's going to apply next year. Comment on the small business entity rules. So the paper is showing things in a bit more detail, talking about prepayment rules and what they might apply to, especially for businesses with turnovers under $2 million. Some examples of how prepayments might be calculated. Talking about interest, bad debts if you're preparing your returns on an accruals basis, superannuation details. The minimum contributions, etc. So the paper is covering in more detail all of the subjects that are included in the Business Plus newsletter that's going to clients. What our accounting members do is, in some instances they send the paper to clients. In others they advise clients that there is a detailed paper available if they want to receive it, and then respond to requests for the more detailed paper to be sent to them. You will notice there's a number of linkages to other papers. They're papers within ESS BizTools. Detailed commentary there as to how the research and development rules work. Obviously they're the current rules. You're probably aware that for over a year now there's been proposed changes to the research and development regime that's been bogged down in the Senate, unable to receive a vote in favour of it. So the proposed new legislation, which was to have commenced on the 1st of July 2010, is obviously not law, therefore we haven't commented on it. So hopefully that paper, which gives more information, and what we're looking at there is a tax office commentary on home office expenses. The paper would give more information to a client to enable them to decide whether they've got all that they're looking for in their queries on matters to do with the end of financial year. I thought I'd also show you the special Business Plus that we produced the day after the 2011-12 federal budget was produced. We issue this every year, and this special Business Plus is a commentary on items within the federal budget that affect small businesses. We're not worried about a lot of the other issues. So obviously the tax rates for 2011-12 are very important. As you all know, they're the same except for the flood levy. So the government tells us we're only run for 12 months. Anyone laying a bet on that? Obviously we've commented that the corporate tax rate is planned to be reduced in 2012-13. And what we've got in this paper is if a client wants to have a discussion as how the federal budget may have affected their business operations, please contact you as the accountant, having sent this to them. We put some of the key numbers in there, especially the forecast deficit surplus, 49 billion this year, forecast at 22 billion next year. And the government hopes, of course, to be in surplus by 2012-13. We then made some comments on the budget. There's various experts forecasting that Australian dollar could go as high as $1.70. I read one in a newspaper a couple of days ago. The guy was talking about $1.50. The carbon price scheme is going to be formulated in this year, we're told by the government, and already there's a great debate going on. Skills shortages are placing immense pressure on a lot of businesses around Australia. And the government has indicated they're going to try to do something about it with special skills shortage funding for regional areas, and in a new scheme to try to allow employers to cherry pick from a database of people hoping to be placed into the priority migration lists into Australia. Obviously there's a lot of challenges for Australian business operators, and we've summarised them there. Incidentally, where it says that GST revenue is going to be lower by 5.7 million, that should be 5.7 billion. We did correct that in the next Business Plus. I just thought I'd point that out since we're referring to it here today with you. Key issues in the budget: entrepreneurs tax was scrapped. The motor vehicle write-off commences from 1st of July 2012. First 5,000 can be written off, but obviously it's not going to have any cash flow effect for a business under 2013-14. Company tax rate, PAYG tax instalments are only being set at 4% higher than the previous year's taxable income. Fringe benefit tax, there's obviously the changes in how motor vehicles are going to be treated for FBT. Superannuation, the comments there have been submitted by our colleague CST Corporate Solutions, who are a superannuation expert. Excess superannuation contributions, the government has responded to some of the criticism that's been levied at them over the treatment of excess contributions, but it would appear to be only a once-only adjustment and up to a maximum of $10,000. So there could still be a lot of people who are not going to be happy with that change. It won't be enough. And obviously the government hasn't said anything about doing anything about the excess contributions over the last 4 years. Government's proposing to make some changes in the taxation of minors, people under 18. Retirees have got some further fringe type benefit in that they can draw 25% less than they would have from their pension funds. Government's proposing to tighten up on contractors, Phoenix companies to try to recover tax, and in particular also making company directors personally liable for their company's failure to make employee superannuation payments. So there's been a number of issues that were covered in our federal budget paper that are going to affect tax planning in the next 12 months or so. And one of the big ones is there. We've only got 2 lines on it because we really don't know how it's going to work at this stage, but the mining tax, which at this stage is proposed to be a 30% charge on coal and iron ore profits, will probably have some further details announced by the federal government this year. There is a tax summit on in October. So many of those issues do apply to small businesses, and will have some bearing on their tax planning in the year ahead. So that's a summary of the material that ESS BizTools supplies to its subscribers on both end-of-year tax planning. Most of our accounting firm members brand that paper on end-of-year tax planning and distribute it to their clients, and a fair number of them also do the same thing for the federal budget as it affects SMEs, so as to assist the accounting firms to keep their clients informed of matters affecting their business in the both the current period based on what the federal budget was saying as it's projected forward, and obviously in the very real end-of-year tax situation that's coming up in about 6 weeks' time. ESS BizTools has a wide range of products to enable accountants to deliver business advisory services to their clients. Obviously, what ESS BizTools is primarily concentrating on is assisting accountants to deliver advice to their clients on non-compliance issues. We really do not have too much on taxation within ESS BizTools. Our current projects are we are progressively introducing forms, checklists, videos on matters affecting the introduction of business advisory services to clients. We believe that with the tax office's announcements relative to trying to encourage more and more wage earners to not lodge their tax returns through accountants or tax agents, but to lodge direct with the tax office or use the tax office's new system, that it's going to put significant pressure on accountants over the next few years. That's a substantial number of wage earners vacate the market. That's going to put a lot of pressure on some accounting firms who specialise in that market. And we believe that those people will be looking to undertake more work in the small medium enterprise market. The Tax Commissioner indicated recently that already 2.4 million Australians are lodging their tax returns direct with the Taxation Office, and they're obviously hopeful of trying to get another 1.5 to 2 million of those people over the next few years. What effect's all this going to have on your business? And whilst you might say you don't have too many wage earner tax returns, there is a significant effect if you value out those tax returns at about $100 each. There's a significant amount of income being withdrawn from the Australian accountancy market on an annual basis. Some figures have indicated this could be $200 to $300 million per annum is being withdrawn in effect. So there's going to be a lot of pressure out there on some firms in trying to replace that revenue. And at the same time, you've only got to look at the newspaper advertisements in the main newspapers in Australia and New Zealand to see that there are people out there trying to promote consultancy franchises. And those consultancy services are trying to add consultancy services that we believe accountants should be able to deliver to their clients. Therefore, if you are not seen to be offering the services of business health checks, business planning, succession planning, advice on buying a business and selling a business, corporate governance areas, and general advice to SME clients to assist them in achieving their business objectives, then someone else will start doing it for them. And unfortunately, we believe that over the next few years the tax return is going to become more and more a compliance issue. Sorry, not a compliance, it obviously is a compliance issue, a commodity issue. The price will be forced down because of increased competition. One way to really differentiate yourself from the marketplace is to offer business advisory services. So ESS BizTools is currently working on introducing a full preparation checklist procedures. We had our first webinar on this last week. Our next one's on the 1st of June and then on the 8th of June. And you can register for those through our website. And on the 12th of July, we are starting for subscribers to ESS BizTools 20-minute webinars on the actual implementation of business advisory services strategies for firms. So instead of us obviously turning up and working one-on-one with an accounting firm, we're going to try to do it via a webinar. So we think it's an exciting time. As well as that, we are working on releasing a new product called eAffiliate, which will allow you to offer papers for sale via your website, which will be linked to our other website, eAffiliate. That product will be launched over the next 4 to 6 weeks, and we will be sending you emails about that. And in August, we plan to launch our government grants link program, which will assist accountants delivering business advisory services to be able to identify which government grants might be suitable for particular clients. So that's what we do as a business in trying to assist accountants to deliver advice in the non-compliance area. I'll just see if there's any questions on the matters we've discussed today. We also have a checklist which I've just brought up on the screen of some of the matters you might consider in talking to clients as to whether they should still be coming to you, even though the tax commissioner's trying to encourage them to lodge direct with him. The main issue seems to be what is the level of personal claims that someone might be able to claim. This year the tax office is allowing a general item of $500 and next year $1,000. but the average in Australia apparently is about $1,700. Are your clients currently benefiting from high personal claims? If so, obviously you should be encouraging them to stay with you for their tax returns. If a client's got a share portfolio or is paying for sickness and accident insurance policies, that's another good reason why they should be staying with you. And if they have a rental property, or they might be eligible for various tax offsets, or in a salary sacrifice, or using their own vehicle for work-related travel. There's another question to do with graduates who have a HECS debt to pay if they're working, if they graduated, in mathematics, science, or early childhood courses, and they're working in those areas. They can get a reduction of their HECS debt of about $1,500 to $1,600 per annum. People moving from one zone to the other. And have they also got medical expenses in excess of $2,000 per annum? These are some of the issues that if clients fall into these categories, then you probably should be encouraging them to stay with your firm. And obviously if they're a nice person and they're not a price shopper, and they're not demanding a partner or senior manager attend to their work, in other words, enabling the firm to effect delegation, then you probably should be doing your utmost to retain those clients, but the others are probably going to end up going down the path that the taxation office is encouraging them to do. So thank you very much for participating today in this webinar. Maya, our Marketing and Sales Manager, will be in contact with you. If you have any queries on any aspect of ESS BizTools, on any of the products which we offer, please don't hesitate to contact us. Thank you for participating. Have a great day. And for those of you in New South Wales and Queensland, well, may the better team win in tonight's game, as long as they're red. Thank you. Bye-bye.